afternoon, everyone. I am Ritu Singh Sharma, Additional Director General, Directorate of Public Relations, Publications and Publicity, CBDT, New Delhi. I warmly welcome you all to this very special edition of Samvaad. Today's session holds particular significance. As you are aware, the Income Tax Act 2025 has been passed by Parliament and is set to come into effect from 1st of April 2026. This historic legislation marks a major step towards simplifying, modernizing, and consolidating the provisions of the existing Income Tax Act 1961. Here, we would like to add that the Income Tax Bill 2025 was introduced in Parliament in February 2025, and at that time, a series of Samvaad sessions on the provisions of the bill were launched on our official YouTube channel. Now, the bill has become Act. And in order to make our viewers aware about the applicability of this Act and how the new Act will ease their lives, we have launched this Samvaad series. In this first episode, we shall be discussing the key features of the new Act, its applicability vis-a-vis the Income Tax Act 1961, and we shall also be touching upon the key takeaways from the Income Tax Act 2025. To help us understand the Act in depth, we are privileged to have with us a very distinguished guest. Please join me in welcoming Shri Ashok Kumar Jha sir, a senior IRS officer from 1990 batch, who recently superannuated as the Chief Commissioner of Income Tax, Mumbai. Over a distinguished career spanning more than 3 decades, sir has served in Mumbai, Kolkata, Patna and Nagpur, contributing significantly across various domains of the Income Tax Department. Notably, sir was one of the key members of the core committee entrusted with simplifying and rationalizing the decades-old Income Tax Act. Sir also spearheaded the journey of the Income Tax Bill 2025 from Bill to Income Tax Act 2025. We are truly honored to have him with us today. Welcome, sir, and thank you for joining us in what is undoubtedly one of the most important episodes in this special Samvaad series. We sincerely appreciate your taking the time out of your schedule to help us explain this transformative legislation to the public.
Thank you very much, Ritu, for having me here.
Thank you, sir. Sir, to set the context and to recapitulate our last Samvaad session with Shri V.K. Gupta, sir, can you please tell our viewers as to when the Simplification of Income Tax Act 1961 was initiated and when it reached completion?
So, Ritu, the whole exercise started with the announcement made by the Honorable Finance Minister in the Parliament on 23rd July 2024. After that, the next milestone is the introduction of the bill in the Lok Sabha on 13th February 2025. That's just roughly 6 months. And the whole exercise was completed with the passing of the bill on 21st August 2025. And the key takeaway is that the new act will come into effect on 1st April 2026 and will apply from tax year 2026-27 onwards. We will discuss what the tax year is in the due course.
So the Income Tax Act 1961 served us for 6 decades. What was the rationale for replacing it with Income Tax Act 2025 instead of simply amending the old act?
So true, Ritu, the Income Tax Act 1961 has indeed served the country very effectively for over 6 decades. Now, but the problem was that while the Income Tax Act saw very few amendments initially,
Yes,
it eventually escalated to up to maybe 100 amendments every year.
Okay.
And then you had these multiple taxation law amendment bills, which had a whole new set of introductions in the Act.
Yes.
So over a period of time, the Income Tax Act really expanded to over 500,000 words.
Okay.
And it became a bit of a patchwork too. So with the object to simplify the Act and make it more accessible to the common taxpayer,
Yes.
and we decided that amendment was not sufficient because you were looking at removing 50% of the words and making it simpler. So a fresh enactment became necessary.
Right.
One of the key outcome of this exercise was that the number of sections reduced from 819 to 536, and the word count in the Income Tax Act dropped from 5 lakh words to just about 2.6 lakh words. So you could not have achieved all these things by amendments. You needed a fresh, simplified and a clean act. the detailed section mapping of the two acts, what was in the old act 1961 and what is the corresponding provision in the new act, that is the 2025 act, is there in the table, and this helps in transitioning from the old act to the new act.
Right, sir. So that is very nice.
You see, there were other imperatives also, larger policy goals also, beyond just a simplification of words. It was the need of the hour.
Right, sir.
Now, over the last 10 years, 10, 12 years, millions of Indians have been lifted out of multidimensional poverty. You
Yes,
would
sir.
be aware of that. And the country and our economy has advanced from being the 10th largest in the world to the 4th largest, and maybe we would soon be the 3rd largest economy in the world.
Yes.
And we have objectives. The government has announced objectives of Viksit Bharat by the year 2047. And I would think that 5 trillion economy is out. We are looking at maybe $30 trillion economy by the centenary of the independence. Now, Ritu, this growth,
Yes.
this economic growth is creating an unprecedented base of new entrepreneurs.
Yes, sir.
And this demands a modern direct tax structure that empowers people rather than hindering economic participation and growth. So all these things holistically, the government decided that it required, the need of the hour was to have a new direct tax code, simpler and aiding the people in their economic and entrepreneurship pursuits.
Very well said, sir. Very nice, sir. So how does the new Income Tax Act achieve this simplification? Can you elaborate further on this point, sir?
Right. So we found that there were common provisions affecting one thing dispersed all over the act.
Right, sir.
And as I told you, the existing act has more than 5 lakh words.
Yes,
So
sir.
hunting for them across 5 lakh words became a challenge for the common taxpayer. So the act brings together provisions that were previously or in this act scattered across multiple chapters.
Okay, sir.
So that was one. For example, provisions relating to non-profit organizations, NPOs or trust
NPOs.
as
Yes,
people
sir.
call them, were earlier spread, you won't believe this, across 5 separate chapters.
Okay, sir.
And there were 15 sections, important sections all over the act. Now, these have now been consolidated in one chapter. If my memory serves me right, chapter 17B.
Okay, sir.
And it is called Special Provisions for Registered Non-Profit Organizations. You have that one-stop place to look at every direct tax law on NPOs.
NPOs.
So that is, and then you have also simplified by calling all these educational institutions, medical institutes, colleges, all of them calling one term, registered non-profit organization, which is now an umbrella term covering all these charitable and exempt entities.
That is a very good, very simple step, sir. Simple and yet effective.
Correct.
Yes.
And you one place.
Yes,
you
at
not
one place.
thumb the act and see
Okay.
yeah, there's something here and there's something there. So that was always very vexatious
Ye-
for the taxpayer to look for.
Yes.
Another thing that the new act does is the provisos and the explanations.
Yeah.
The provisos, there were, I think, about 1,200 provisos and 900 odd explanations in the 1961 Act.
Okay, sir.
Now we have integrated them with the main section.
Right, sir.
So layers of provisos and layers of explanations, some provisos having explanations, and then the explanation having more provisos, which was very confusing for the common taxpayer. This has been eliminated. Now, again, on the theme of non-profit organizations, Section 11 was the key section.
Yes.
That was the heart of the code section. That section had 13 explanations and maybe if 16 to 17 provisos. These have now, Ritu, they have been streamlined.
Okay, sir.
So we got rid of the provisos and the explanations and put it in the main section. Then one small thing that it's small, but it was visually very soothing to me, at least. Alphabetical suffixes.
Okay, sir.
Like you had section 115A, 115B, 115J, 115K, 115W, 234A, 234B, 230. So all these alphabetical suffixes, which were visually cumbersome.
Yes, sir.
And it had a historical background. Every time you wanted to add something, you made it 234C. This has been done away with.
Okay,
You
sir.
straight have numbering from section 1 to section 536 without these alphabetical suffixes to sections. Again, makes it visually appealing.
Yes, sir.
And there's another thing which is my favorite. Now, you had references in the 61 Act like subclause small I of clause small b of subsection 1 of section 133. So that was a little complicated. It is now in the new act. It is these things are expressed very simply as section 133 bracket 1 bracket small b bracket I.
Okay, sir.
So subsection this, of section this, of clause this, of subclause that.
Yes, sir.
Well, that was the archaic way of writing, so we have made it very simpler.
And
So
that will, sir, answer, and just sorry to interrupt you, sir, but that will be so convenient for the taxpayer who first, it was difficult for him to understand what is subclause 1, subsection 1. So it will, I'm very sure that this will make reading a fact and comprehending it much easier for a taxpayer. So that is a very big step, sir.
True. Again, yes. Like you write 133
yes.
bracket 1 bracket small c.
Yes.
So you're telling the common person, go to section 133 bracket 1, go to bracket 1 and then go to small b.
Yes.
Instead of writing two lines,
yes.
subclause b of section 1. And so that hasn't done it. It has made more streamlined and made it easier. And that is, if I may say so, that is how most of the officers in the department, a lot of tax practitioners also write and refer to sections.
Yes, yes.
So you are actually changing what is there to what actually is done these days. So there's the divorce between how you actually wrote and how the sections were written in the act have been converged, if I may say so.
Yes, sir.
Then, well, there have been some structural reorganization of specific sections. And Ritu, if I may say so, people may wonder how structural reorganization can make specific sections easier to comprehend and digest. I'll give you one example.
Yes.
This is section 222 small e in the 61 Act.
Okay, sir.
If you see the section, one chunky paragraph, no full stops, no nothing, several lines, made it difficult for people to understand.
Yes.
I personally spent many weeks trying to figure out what it said. Now, look at the way this 2025 Act has restructured the same section.
Okay, sir.
1, 2, and 3.
Right.
Just by looking at it and without going into the depth, intuitively you can say that this structural reorganization of a simple section has made it much easier for even a lay person to understand its import.
Okay, sir.
These are the examples now. The provision, see this provision, look at this, another provision. This provision existed in the 1961 Act as one continuous, unbroken paragraph of several words.
Right, sir.
No full stop, as I said, making it difficult to read, interpret, or apply.
Yes, sir.
Now again, change like this. At a glance, you can very quickly get the import, the different scenarios, the different effects are very simple to understand. So that I feel is a major innovation of how structural reorganization makes the task of interpreting a provision a little easier for the common taxpayer.
Yes, sir. It will not only make it easier to understand, to comprehend, but it will also save a lot of time. Of time, because if it is in single sentence, running into number of sentences, number of lines, so it takes a lot of time. You have to reread the sentence. Now breaking it into different sentences will definitely save the time, make it easier to comprehend, and it will benefit both.
On a lighter note, I would run out of breath reading the section, because the section we used to have no full stop. Like again, as I told you, provisos and explanations, people have been writing, provisos have been removed. But look at something like section 10 of the 61 Act.
Yes, sir.
If my memory serves me right, it has 140 clauses, around 90 explanations, and 134 provisos.
Yes.
Very difficult to navigate. Now, in the 2025 Act, the exemption provisions have been reorganized in very logical, thematic schedules, grouped by the nature of exemption and the type of income.
Okay,
so you don't need to read everything. Go what concerns you. It's all there at one place, thematically sorted out.
Okay, sir.
So this is how the restructuring and simplification has been done.
Okay, sir. That's so wonderful, sir. So one more very important word which was used in the earlier Act 1961, notwithstanding. So, sir, notwithstanding has been replaced by irrespective of, and this has generated some debate. Similarly, the removal of provisos and explanations, as you have mentioned, sir, that is also being discussed a lot. Can you explain further on this, sir?
Now, yes, I'm aware of this discussion, and some of them coming from very eminent and respectable personalities that
Yes,
the word notwithstanding particularly and removal of provisos and explanations would have an impact because these are old terms, these have received judicial interpretations over a period of time.
yes, sir.
So let us start with the expression notwithstanding, and these are my personal views, what I think, and I may be wrong, and I have the humility to say that no one can be perfect in the Income Tax Act. So now the expression notwithstanding, a long word, how many, 15, 16 letters, I think.
Yes, sir.
Well, it appears over 400 times in the 61 Act. Now, Ritu, the purpose of the word is to function as a statutory override,
Override. Yes.
meaning that this provision will operate despite anything inconsistent anywhere else.
Yeah.
Now, it is my respectful submission and subject to correction. Now, this interpretive function is fully preserved in the new Act. Only the phrase notwithstanding has been modernized to irrespective of.
Right, sir.
Now, I personally feel that the lexical choice is immaterial to the legal effect.
Okay.
Now, what matters is the substance of the override, that there is an override. And this, Ritu, I feel has remained intact.
Intact.
I have not seen an example.
Okay.
To tell you a very basic example,
Yes.
notwithstanding the fact it is Sunday, you'll have to come to office.
Ah,
Irrespective of the fact that it is Sunday, you'll have to come to office. Now, what shades of legal nuances do we see here?
yes.
So
Nothing.
and even in jurisdiction, advanced tax jurisdiction like the UK, where we got these phrases, such archaic formulations are no longer there. It used to be there.
Okay, sir.
So the trend in even advanced Western tax jurisdiction is increasingly avoiding old words and phrases in favor of clearer language,
Clear.
removal of even provisos and explanations. Now, if you ask me where the provisos and the explanations were placed in the Act, cannot be very important.
Yes.
The content, what they are saying, is important.
Is important.
That
yes,
is
sir.
more important. So, under the 1961 Act, one frequently encountered, and we discussed provisos within clauses, explanation to provisos, even provisos to explanations.
Yes, sir.
This Ritu created a very dense and often a very confusing structure.
Right, sir.
So now this 2025 Act integrates all these provisos and explanations directly into the operative section.
Operative section.
Therefore, it makes the provisions more accessible, but without altering the legal intent.
Okay, sir.
The whole purpose of the Act is that you simplify, but without altering the legal nuances. It is difficult. It is easier said than done, but we have tried, and I think, and I'm confident that that we have succeeded. And my last thing on this is, I am personally, it is my
Yes.
personal view, I am confident that courts and the appellate authorities, they will continue to be guided by the substance and the content of the proviso and the explanation, and not whether the substance or the content appeared as a proviso or as a explanation or it appeared in the main clause. Go by the content.
Yes, sir. Very rightly said, sir. And I'm also hopeful of this, sir. So, what kind of redundancy removal has taken place? And what will happen to the pending court cases, sir, in the cases where the redundant provisions have been removed from the Income Tax Act?
A valid point. So, removal of redundancy was a major objective. In fact, initially it was one of the three primary objectives that we had, that we need to get rid of provisions that were no longer required in the Act.
Okay, sir.
Now, even you would be aware of, we had fringe benefit tax a
Yes, sir.
long time back now. It ceased to apply from maybe assessment year 11, 12 or
Okay,
something.
sir.
You had provisions like section 10A, which is no longer available since around the same time, I think 12, 13.
Yes, sir.
And then you had sections like 1033. It was the US 64, the famous or the infamous US 64 scheme.
Yes, sir.
It became, those were transition provisions. It became irrelevant after AY, I think 2002.
Oh,
But so, frankly, these were not provisions one would wish to keep seeing printed in the Income Tax Act that we purchase every year.
yes, sir.
We purchase the Income Tax Act, these provisions would still be printed, making it quite bulky. And the whole 61 Act was replete with such instances of redundant sections.
Okay, sir.
So those were identified very carefully, the sections which do not have any relevance for the current year, and these were declared as redundant and done away with. So, and your question very valid. What will happen to the court cases? Now, there may be a litigation pending in a Honorable High Court on FBT, fringe benefit tax. Now, my view is that the pending court cases remain fully protected.
Okay, sir.
Because the courts, the honorable courts, will continue to adjudicate them on the basis of the law applicable to the relevant assessment year.
Relevant assessment year, right, sir.
For example, let's take the example that you gave, an FBT, fringe benefit tax dispute, is pending before the Honorable High Court.
Yes, sir.
Now, the court will apply the fringe benefit tax provisions involved into exactly as they stood for assessment year 9-10.
Yes, sir.
Correct?
Yes, sir.
Even though these provisions do not appear in the 2025 Act.
Right, sir.
Because what I feel is, and I think it is fairly settled, because that the tax liability is determined by the law in force for that year.
For that year.
Right. And the omission of a provision and the omission of a provision in a later enactment or subsequently does not extinguish these rights or liabilities or proceedings.
Yes.
And there is some clarity provided in the repeals and saving clause in the 2025 Act, that is section 536, which says this. So again, in a nutshell, interpret the law in disputes, the law as it then stood. So therefore, that this principle is intact, even in section 536.
Right. So coming to the next question. So what is the rationale for greater use of formula-based provisions in the new Act? We have heard a lot about this, that many formulas and charts have been used in the new Act. So what was the rationale behind use of these?
So, of course, you had to achieve a simplification.
Yes.
So, Ritu, if you see, the Income Tax Act now frequently involves very detailed computations and quantifications.
Yes,
this much deduction, this much exemption, this is your total income. If you do this, then this amount. So these computations and quantification, when expressed solely in words, it becomes a sort of, verbose, complex, and sometimes it becomes susceptible to multiple interpretations also.
Yes.
Now, we felt that by presenting in clear formulas, the provisions become easier to understand.
Okay, sir.
Maybe a little unfamiliar at first, but I think we will very readily adapt to it in no time. Now, let me give you an example. This is the provision which exists in the 1961 Act. You can see it in the screen.
Okay, sir.
Now, this formulation in text is difficult to understand.
Yes, sir.
Now, look at how the 2025 Act has given a formula. In an instant, you can make out that it is much easier to comprehend how the computation of the amount is to be made.
Okay, sir.
So this is what we have done.
Okay, sir. That's wonderful, sir. Sir, it is learned that during the simplification exercise, certain parts of the Income Tax Act 1961 were shifted to rules. Can you please explain the logic behind such shifting and how this will ease the lives of the taxpayers, sir?
So yes, that has happened, and you have correctly identified that has happened. So let me take the example of a late introduction, a recent introduction in the Income Tax Act, that is the faceless assessment procedure that you would be aware of.
Yes, sir.
And that is section 144B, 144 bravo. That is, if my counting, if it is correct, then that has more than 4,000 words, one section.
Okay, sir.
So the faceless assessment thing, the 144B section spells out every step,
okay, sir,
including small and relatively unimportant things like how do you transfer records from the faceless assessment officer to the jurisdictional assessment officer.
Okay, sir.
So the basic principle that guided us was that substantive law,
right,
you know, substantive law means rights, duties, and powers. They belong to the statute.
Okay, sir.
And how you implement them, the procedure, belongs to the rules. Generally, I'm making a broad generalization. So, like, why should technical specifications like what is a hash function and what exactly is video conferencing, these can very well be in the rules than in the Act, and cluttering up the statute, making people a little difficult to navigate through the important provisions in the Act.
Yes.
So, and remember, there may be a technical advancement. So
Yes.
now, if video conferencing has to incorporate that, why would you have a very cumbersome procedure of amending the act?
Yes.
It is better off in the rules. And remember, Ritu, rules must be laid before the parliament,
Yes.
which can either annul or modify them. That is, parliament is supreme. Now, rules which are in contravention to the act,
Yes.
they are void.
Yes.
So therefore, remember, procedural rights are equally enforceable when prescribed in the rules.
Yes, sir.
So, for instance, again, 144B faceless.
Yes.
You can't have rules which make faceless assessment optional, because
Yes.
that will be too much and that will be contrary to the act. It cannot permit physical interface where the main section of the act does not permit. Correct.
Yes.
So overall, this is the thing.
Okay, sir.
Because the act substantive provisions, how to implement the substantive provisions, shifted to the rules. Make the act sleek, make the act very focused for people to understand.
Yes, sir.
First, they understand what substantive powers are there in the act, then go to the procedure and see the rules. It is not arbitrary, it has to be consistent with the act.
Yes.
It is placed before the parliament, and therefore it is not something that is just there.
Yes, sir. So it ensures that the sufficient check is there. At the same time, it ensures simplicity in reading and focused reading of the act.
Decluttering,
Yes, decluttering. Yes, sir. So that brings us to the subject of repeals and savings. Could you explain how the new act addresses this transition, sir?
So, Ritu, again, a very important and a crucial section, particularly in the initial years.
Yes, sir.
So, let me say this, that all rights,
Yes, sir.
obligations, and liabilities of the taxpayer,
yes, sir,
and also of the department, if I may say so, they are fully protected.
Okay, sir.
Fully protected through the repeals and saving provisions. That is section 536.
Okay, sir.
So nothing changes, because I told you this is a simplification exercise. Our attempt has been not to change and make any substantive changes.
Right,
So
sir.
whatever was there in the old act in terms of the substantive provisions, they transition very smoothly to the new act. And there is a dedicated removal of difficulties clause also. I think it is section 535, just a section before,
Yes,
which
sir.
empowers the issuing of necessary direction should any difficulty arise in giving effect to the provisions of the new act.
New act.
And if you compare the repeals and saving provisions with the old act, 1961 act, it is pretty granular and comprehensive.
Okay, sir.
Several transition scenarios are envisaged and contemplated, and they are written there. So therefore, there is some clarity, a greater clarity, and an attempt to minimize ambiguity during the migration from the 61 to the 2025 Act.
Okay, sir. So one of the major innovations in the 2025 Act is the introduction of the concept of the tax year.
Oh, yes.
So could you tell us more about this change?
So you're right, it is one of the most significant innovation in the 2025 Act. Now, under the 1961 Act,
Yes,
we
sir.
operated with three sometimes parallel year references. You
Yes,
had
sir.
the previous year,
Hmm.
you had the assessment year, and
Yes,
you
sir.
also had the financial year.
Yes, sir.
Now, taxpayers like you and me, we earn income in a previous year.
Yes, sir.
All the money, the income was earned in the previous year, but we had to file returns in the subsequent assessment year,
Assessment year.
forcing a lot of taxpayers to constantly reconcile different year labels, if I may use that word, for the same income.
For the same income.
Previous
yes,
year is there, assessment year is there. And the term previous year itself is a little bit linguistically misleading. It conveys previous past period.
Yes.
Previous, the word previous means a past or
Past.
earlier period.
Yes, sir.
Even though it actually refers to the current year of earning income.
Yes, sir.
So this created some unnecessary confusion. Again, like for instance, section 139(1), that is the section which mandates filing of returns.
Yes.
It speaks of filing. Income return for the income earned in the previous year, while the return form itself displays assessment year.
Assessment year. Yes, sir.
And then you had departmental notices and which also refer to the assessment year and not the financial year or the previous year in which the income was actually served. Now, to cut a long story short, it's all very confusing.
Yes.
Maybe to seasoned professionals and departmental officials, these things are a little clearer. But to a common man, this previous year, assessment year, financial year, a little bit confusing. So, what has been done in the 25 Act? Now, tax year, Ritu, is the unit period of taxation.
Okay, sir.
Basic unit period. The
Basic.
12-month period from 1st April to 31st March is now called tax year.
Okay, sir.
And this tax year replaces both the previous year and the assessment year.
Okay, sir.
So that is so all transactions, taxable income, assessments, notices, all proceedings will now be as per
Tax
the
year.
tax year,
Okay, sir.
eliminating the concept of or eliminating the confusion between previous year and assessment year, and to some extent financial year also. This confusion will be eliminated.
Okay, sir.
So tax will now be charged for the tax year.
Okay, sir.
At the rate specified, and the ITR, the income tax return, will also be filed for the tax year.
Okay, sir.
Assessment proceedings will now relate to the relevant tax year, and not to an assessment year.
Okay, sir.
Compliance timelines, like when do you have to file the return, when can you file a revised return, when the assessments have to be completed, all those deadlines, they are now anchored to the end of the relevant tax year, 31st March of that tax year.
Okay,
for example, a revised return may be filed within 9 months from the end of the tax year.
Okay, sir.
You had the timeline. And financial year at a very few places is retained only for procedural and compliance purposes. Okay. For instance, one instance that I remember is that the due date of filing an income tax return is the due date in the financial year succeeding the relevant tax year. Because we didn't want to use tax year and then again tax year.
Okay, sir. Okay.
So tax year is now the basic dominant theme of the 2025 Act.
Okay.
That is.
And which is in alignment with the international norms, sir?
Very true. Okay. Very true. That is also. Previous year was very confusing. Which previous year are you talking about? No,
yes,
we are talking about this year in which we are earning income. So that was a little acoustically odd also. So that has been streamlined.
Okay, sir. That's a wonderful innovation, sir. So another major provision which has often been talked about in the new Income Tax Act is the streamlining in TDS provisions in the Income Tax Act 2025. Can you please elaborate more on this, sir?
Yes, true, because TDS impacts and touches a lot many, because all income has some element of TDS. So now the earlier set of 43, I think 43 or maybe 44, I'm not sure, but 43 separate TDS sections have been now consolidated into 3 tables.
Okay, sir.
Grouped by payee category, residents, non-residents, and any person.
Okay, sir.
So you just have to figure out what you are and look at that table, and rest is not very material. All TDS provisions from the entire Act have been imported in just one section, Section 393, except TDS on salary.
Okay, sir.
So again, you don't have to look for things all across the Act. Okay, in fact, even think like cases where no TDS is required to be made, there is a separate table which lists cases.
Okay,
TCS provisions, if I remember correctly, is also in just one section now, Section 394.
Okay, sir.
And along the way, small taxpayer benefit facilities have also been built in, a small here and there. For instance, you had a lower deduction certificate, like if you are eligible for TDS at 10% and you wanted something lower, then there was a procedure. Now that was for a few TDS sections. Now it has been broadened to include all.
Okay, sir.
Because it helps prevent unnecessary cash flow blockages for the SSC. And the nil rate of TDS deduction is also there. There was a small thing where I can share with you a small anecdote, because we said ki lower or nil rate of TDS.
Okay, sir.
There is a prescribed rate, so you wanted a lower, say 10% is lower, you wanted 3%.
Yes.
And or you could have said ki okay, there should be no TDS, that is nil.
Nil.
So initially it was felt that nil is covered in lower.
Yes, sir.
Because nil is lower than lower.
Lower.
But then there was some controversy. Okay, now no one will give us nil rate.
Okay.
And it will only be lower. It will be 0.1%, but not nil.
But not nil. Oh.
So in deference and in respect to some feedback that we analyzed, this could become an issue, we have restored both nil and a lower rate of TDS.
Okay, sir.
So again, the anxiety was that let us not change something which may unintentionally lead to a new kind of an interpretation.
Okay, sir.
They said, okay, nil is part of lower, but now it is leading to some concerns and anxieties. Let us retain it. How does it make a difference?
Okay, sir.
Again, another example that I can give you, in house property, there is a word called land appurtenant to a building.
Yes, sir.
Appurtenant.
Yes, appurtenant.
Now, we thought, to find a simpler word for appurtenant, but we could not
Okay, sir.
get it, because appurtenant may mean something which is touching the building, land, or it may be a generator room which is 500 meters away, but that generator room is necessary for running the building. So that generator room, even though not physically together, is also appurtenant.
Appurtenant. Okay,
So
sir.
we could not find next, adjacent. It was not fitting. So we have allowed it
Okay,
to
sir.
remain. So that point I also want to make, where it was felt that simplification may yield some fresh controversies.
Yes, sir.
We have retained and continued with the existing words.
Okay.
So because to prevent litigation arising just from simplification.
Yes, sir. Yes, sir. Because that was, as you have mentioned earlier, sir, that was one of the core objectives.
Core objective.
That it has to be simple, but it should not lead to increased litigation.
Yes, and the legal nuances should not be changed.
Should not
Again,
be
I will
changed.
say the same thing, not easy. In the
it
Income
is,
Tax Act,
yes.
when you even change a comma,
Yes, sir.
sometimes you would look at a simplification, the next day it would seem that this may lead to a new interpretation, then again back to the drawing board to see how it can be reduced. So it was difficult, and all in 6 months.
All in 6 months.
Less than 6 months.
So I would also here like to discuss about concerns which have been raised in different quarters on expansion of powers in relation to search and seizure. Has there been any such expansion, sir? Expansion
I
of powers?
don't think so.
Okay.
I really don't think so. You see, the 61 Act was conceived for a paper-based economy.
Yes, sir.
You had physical records in the premises of the taxpayer, tangible assets which you can hold, feel, and see, secret diaries having unrecorded entries, documents that you could rummage during the course of search and that could be located, seized, and filmed and photographed. Now, those days are gone.
Yes.
Now, with a digitized economy, income, assets, critical financial data, financial evidence now mostly exist in an electronic form.
Yes, sir.
You would agree with me?
Yes, sir.
In cloud environments?
Yes, sir.
In virtual storage? In devices?
Yes, sir.
Even your mobile phone is encrypted. I can't open it unless I know the startup code. These are no longer in physical files. Now, what does the 2025 Act do in this realm? Now, it updates the definition of books of account.
Okay, sir.
Books of account is defined. Now, it cover data, I think, stored in cloud drives, in virtual storage, in digital wallets. Now, in 2025, Ritu, a business owner may maintain no physical books at all.
Absolutely, sir.
Absolutely. So that was the past era that has gone by. All the records existing solely in cloud accounting software is possible.
Yes.
So why will the Income Tax Act not update itself? So I would say the search procedure, I'm not in search, procedure is an updating one.
Okay.
Now again, the definition of computer systems is then correspondingly widened to include cloud servers, and why will it not? External memory devices, virtual digital space. Either it should be clear that virtual digital space is not used to store commercially sensitive data.
Yes.
Data that has an impact on the computation of your total income.
Yes.
Or there has to be an inspection of the data stored in the virtual digital space. How can you say it is immune from lawful inspection?
Very true, sir.
So, and again, like evidentiary presumptions also that has been updated. Section is there. Now, if there's evidence of digital communication, exchange of emails, exchange of messages, data exchanges, if these are found, then the law will presume that the exchange of email actually happened. This is one change, because you said email exchange. Just as it would be for physical letters in olden times, not in your time, my times, old people times. Physical letter recovered from the desk, email exchange have to be at the same footing. Because the technology has changed.
Yes.
Encryption also. So encryption is a part, people who have passwords. Now, Ritu, again on a lighter tone, in our times, in 80s and 90s, the maximum encryption that we found was undercasting of amounts by 2 zeros.
2 zeros, okay, sir.
So, for instance, 1,000 rupees would be written as 10.
10.
So 2 zeros would go. That was the level of encryption.
Yes.
So we can't. The Act has to update now.
Yes.
Now, therefore, the new Act would require, and very logically and commonsensically, that a person in possession of electronic records, he has to provide access codes and passwords so that income sensitive information can be examined.
Yes.
Now, even then, all these things, and again, this is my personal perception, is sought even today during the course of search. Now, all this is now formally grounded in the statute itself.
Okay, sir.
And for ensuring procedural clarity, let it be there in the Act.
Yes, sir.
Again, the Act has to recognize that information about undisclosed assets, bitcoins, may be held by intermediaries and the person himself.
Yes,
I
sir.
don't have bundles of cash.
Yes, sir.
A bitcoin can be, I can erase everything. So these data custodians and service providers, they can be also brought in the scope of the search when they hold information relevant to the specified assets, not only the beneficial owner.
Okay, sir.
Again, a very basic point to end my thing, that search changes are merely an updating amendment. Even in the current Act,
Yes, sir.
you had long-standing powers to break open the locks, doors, boxes, safe, almirahs where access was not given or the person was not cooperating. You could break open the lock to a receptacle. Receptacle is the right term.
Yes, sir.
This is now simply extending this to the technological form that the department is now encountering in overriding access control and computer systems. Again, an upgradation of the existing powers, not necessarily the creation of new ones.
Okay.
Right.
Very rightly said, sir. And as you rightly mentioned in the start also, sir, the entire exercise was to make it a modern tax structure
Correct.
in line with the changing economy, and this is what the current
Correct.
need is.
So, did
Yes.
you really want the books of account to say floppy disks?
Yes, sir. We cannot.
You cannot. The floppy disk days are over. So, it has to go to newer storage devices on the virtual digital space.
Yes.
Where data is there.
Yes. So, with these upgradations, are there some key guardrails governing the department's search powers, especially in relation to digital data?
Yes, I have been aware of concerns being expressed, but let me tell you this, that this is only for search.
Okay, sir.
Now, for a search, as you would be aware of, a search warrant is required from very senior officers.
Yes, sir.
It's just not that you can walk in. And these powers, again, it is important to appreciate, these powers operate strictly for the duration of the search.
Yes, sir.
Right? It starts on the execution of the search warrant and ends when the search is concluded.
Right, sir.
Thereafter, there is no authority to access like digital records or to override encryption. These authorities and these powers end.
Okay, sir.
Every single taxpayer is very important, but realistically, it may be important to recognize that the application of search procedure is confined to a very small fraction of the SSC base. Maybe, if I may stick my neck out, maybe 0.01 or 0.001% SSCs are subjected to search because these have come down, surveys have come down, and then there are other safeguards also. You have provisions like Section 138. We have very advanced and modern cyber labs, digital labs in the department, in the investigation wings. There are party witness situations when we operate these materials that we brought. There is going to be an SOP that will also, I think it has come out or is about to come out. So, and again, it is in my 35 years, again, I don't have a very wide experience, but I would say, I'll stick my neck out, say that there have been very few instances, if any, of unauthorized leakage of sensitive SSC information from the department. So, again, you have to see the track record also of the department. So, rest assured, if there is some personal data not related to computation of correct total income of the SSC, they will be safe and there will be no violation because of all these things.
Okay, sir. Sir, coming to the next question. Sir, as we are aware, the salary provisions affect largest number of individual taxpayers, sir. So, can you please explain how have the provisions related to salary been restructured under the new Income Tax Act?
True. So again, let me start by saying that this was not a platform or an occasion for tax policy changes that will again have on 1st February 2026. The policy things will come when the Honorable Finance Minister rises to present the finance bill. So, but there still again have been a lot of innovation for the salaried people. Now under the 1961 Act, the salary components were scattered across multiple chapters. They are now at one place.
Okay, sir.
Now, it has become as simple as section 15 to 19. Look at the index of the Act on the first page. Look at salary. Its salary says section 15 to 19. These are the 5 sections where covers the entire gamut of salary. 15 to 16, if I remember correctly, is what is salary, because there are so many things that constitute salary.
Yes.
15 to 16 is that. 17 is perquisites, which is also a form of salary. So 18 is profits in lieu of salary. So these three things are the charging sections.
Okay,
Says
sir.
by if you have a doubt, then you see. And then section 19 are deductions from salary.
Okay,
And
sir.
end.
Okay.
And end. Like Ritu, you had to give an example, terminal benefits when you retire or
Yes.
superannuate, like gratuity. And in the
Yes,
government,
sir.
it is now, I think the limit is 25 lakhs now, or commuted pension, or
Yes.
leave encashment,
Yes, sir.
or things like retrenchment compensation and VRS.
VRS.
These things were earlier located in another chapter.
Yes,
I think
sir.
it was chapter 3,
Okay.
located in general exemptions.
Okay, sir.
These have now been brought, because they are salary
One
linked,
place.
to the salary chapter in one place.
Okay, sir.
In one place. So earlier, a taxpayer receiving, say, 25 lakh gratuity, he had to deal with salary computation in one place, exemption in another.
Oh.
So, this led to some kind of a practical mismatch and confusion. Now, under the 25 Act, all salary components
Okay, sir.
and their exemptions and deductions are consolidated in a single chapter.
Single chapter.
There may be reference to a schedule,
Okay, sir.
but there is very clear signposting to relevant schedule. You won't miss it. There is a schedule. So there it is mentioned, Schedule 3,
Okay, sir.
if where needed. So the method has become a little more straightforward. Add the terminal benefits that you have got, like gratuity, pension. Now apply the deductions. There itself it is there to get your correct income under the head salary, the taxable income. Sometimes people would claim exemption of gratuity there, but forget to include it in salary, whereas the employees would write in Form 16 that they have given so much gratuity which was not there. So all these things led to mismatch. The computer would flag it as a risk case and select it for scrutiny, subjecting the taxpayers to. So all salary in one place in 5 sections.
So that is real empowerment, sir. Real empowerment of all salary taxpayers.
Let us hope that it works that way.
Yes, sir. Definitely it will, sir. Coming to my last question for this, sir. So since we have spoken a lot about the provisions of the Income Tax Act, but these provisions will also be accompanied by the rules and forms, sir.
Yes.
So can you just tell our viewers about the new rules and forms under the new Income Tax Act, sir?
Yes, because as we discussed earlier in the session, quite a few things have gone in the rules. Also, the procedural part, the non-critical part. So the new rules have to be made, and the forms also are important, because you see the user interface is mainly with the forms.
With the forms,
so you need to have a nice and a decent experience while working on the forms also.
Yes, sir.
So I believe that as we speak, the work on revising the rules and the forms are nearing completion. A lot of time and effort has been given on redrafting these forms and rules.
Okay, sir.
For instance, for the Act, I think someone computed 50,000 to 60,000 man hours, and I think equal amount of hard work and labor has gone in updating the rules and the forms. And I think these will be unveiled very shortly and placed in the public domain.
Okay, sir.
Several updated forms, some forms are more important than others because they come into effect from 1st April 2026 in sync with the commencement of the new 2025 Act, like quarterly TDS statements.
Okay, sir.
First April, though they may be required to be filed in June, but probably April also, because someone may want to file it earlier. The PAN and the TAN application forms.
Okay,
forms, there are so many forms for registered non-profit organizations.
Okay,
forms
sir.
for appeal, because 31st March the assessments would be completed, and then there would be issue of filing appeals in 30 days. So I think the forms for appeal, form number 35 for appeals to commissioner appeals will also be out soon on a priority basis. Forms relating to foreign exchange remittances. These are some of the priority forms that I think, from what I know, will come soon.
Okay, sir.
And I think lastly, I feel, and from whatever little interactions I've had, the intent is to provide clear, modernized and intuitive forms well before the go live date, so that the taxpayers and the intermediaries can experience a very smooth transition.
Okay, sir.
And I also believe that forms are being redesigned to be much more simpler and shorter.
Okay, sir. Which will further aid in achieving the objective which we have achieved through the Income Tax Act 2025.
Very correct, Ritu.
Okay, sir. Okay. Thank you so much, sir.
Thank you, Ritu. Thank you for having me.